When it comes to debt, most people only know of one side, the bad side. We've all been taught our entire lives the evils of debt, how it can lead you to financial ruin, the risk involved with it, and even the stigma attached to it. But what some people don't realize is that there's another side to debt, the side that can be used effectively and responsibly, in such a way where debt can be a real benefit to you and your family, as long as you're using it for the right things. If you're here right now, you probably have some debts and you're wondering how can you pay off your debt faster, and we're going to tell you just how easily to do it. You'll either be absolutely shocked or none too surprised at all that the rich love to use debt to make more money. After all, it's working for them. Why wouldn't you want to learn how to do the same thing? Rich people don't follow the crowd. They're on the lookout for ways to make money that might not be apparent to a lot of people. Debt is something the rich talk about in hushed whispers, because they don't want the poor overhearing their big plans on how to get very rich. Whether it's from stocks and bonds or real estate, here are the top 5 ways rich people make money with debt. Number 1. Most of the trade is based on debt. There are many ways the rich can make money with debt. One of the easiest and most popular is to simply buy something that pays interest, such as a certificate of deposits, savings account, or bond. In order to do so, you will need to invest some capital. A second option includes lending out cash yourself, something more easily done when you're already well off. Interest rates change over time and there's always the risk that someone won't pay back their loan in full. But the rich often get paid very high interest rates and they can afford to wait for repayment if need be. Another common method of making money with debt involves using borrowed funds to start a business. The potential profits are huge. By leveraging your initial investment, you could turn $1 into $10 or even $100 within just a few years. However, as we all know too well, businesses fail at alarming rates and borrowing thousands or millions of dollars can prove dangerous if your company goes under while still owing significant amounts of money. A final way to use debt to make money is through leverage buying. This strategy allows you to borrow money from banks or private lenders, use it to purchase stocks or bonds, then sell them after prices rise and pay off your debts once again. It's similar to short selling, except instead of betting against an asset's value increasing, or with short selling, leverage buying involves borrowing enough cash from others in order to increase one's own holdings. For example, if you had $5 million to spend, you could take out a loan for $3 million and invest that new money in a volatile stock like Tesla. If shares went up by 10% shortly thereafter, you have earned $300,000 without having invested any of your own cash. Selling is one of the greatest skills you could ever master. As opposed to creating things from scratch or building something from nothing, selling requires little more than identifying the problems people are experiencing, which may not be obvious, determining how best to solve those problems with existing solutions, products, and services available on the market today, and convincing them to work with you. Number 2. Refinancing. Refinancing your mortgage with lower interest rates can save you hundreds or thousands in interest and allows you to build equity faster. If you own your home free and clear, it's also a great way to start building wealth without having to put any money down. You can finance an investment property all while still living in your primary residence, avoid paying taxes and paying down debt simultaneously. If you're ready to take on an investment property but don't want a large cash outlay, then refinancing might be right for you. A refinance can get you started without disrupting your current lifestyle. However, if you have a jumbo loan or already have some investment properties under your belt, refinancing isn't likely to make sense for you because there are usually better ways to use that money. It's important to note that when deciding whether or not to refinance your mortgage, there are many factors involved. While lowering your monthly payments may seem like a good idea at first glance, consider what could happen if interest rates go up over time. Will that leave you more financially secure? What about paying off your other debts? How much house can you really afford? These are questions only you can answer. Bottom line, refinancing your mortgage doesn't necessarily mean getting a new one. It's just changing who gets paid every month. So think carefully before making any decisions. especially since there are no second chances once you sign on that dotted line. Number 3. Hedge funds. Hedge funds' long-term strategy includes borrowing money and buying stocks or other securities in hopes that their stock price will rise. If their stocks don't rise, they have to sell them to pay back investors who lend them the money, or the shareholders. For example, a hedge fund might borrow $100 million from investors by selling them a bond, which means they have to pay back investors with interest over time. Then they buy stocks with that money. The stock price rises so they can sell those stocks for more than what they paid for them. They use that profit to pay back investors plus interest and keep whatever's left as profit from themselves. That's how hedge funds make money, by using leverage or borrowing to increase their potential returns. And it works best when stock prices are rising quickly. It'll be hard for hedge funds to make money if stock prices stay flat or fall. So if you invest your retirement savings in a hedge fund, expect your stock portfolio to take a hit next year. At least until you cash out and move on to safer investments like bonds or cash. But remember, your broker might be earning big bucks off your assets even if you lose out. Because of all these factors, experts predict that stocks prices could plummet soon. The Fed has started raising interest rates again, which means investors may start taking money out of stocks and putting it into less risky investments instead. Our advice: sell your stocks before that happens. You can reinvest once interest rates drop again and stock prices rebound. But don't wait too long. Stocks are already dropping, and it doesn't look like they'll rebound anytime soon. Remember that when stocks crash, brokers get rich while you get poor. Number 4. Forex. The Forex market, also known as foreign exchange, FX, or currency trading, is a global decentralized market for trading currencies. In terms of volume of transactions during 2016, it is by far the largest market in the world with average daily turnover amounting to $5.1 trillion. Forex are traded around the clock, and its main participants are large international banks. Almost all currencies in use today are traded among interested parties who take either long or short positions with respect to those currencies. Since currencies are very liquid instruments, and in most cases globally available, and trade close related, major trading firms typically use sophisticated risk management tools to hedge their exposures in different currencies against each other. Otherwise, it would be almost impossible to enter into any transaction without some sort of risk being present. All major currencies are traded 24 hours per day, 5 days per week, except for Sunday when there is no trade at all. Currency pairs are usually traded through spot contracts and future contracts. However, forward contracts are sometimes used too. A currency pair is made up of two currencies: base currency like US dollars and quote currency like euro. For example, if you buy $1 per euro contract, you will have bought $1 base currency unit and sold €1 quote currency unit. If you sell that same contract later on, you will buy back €1 base currency unit and sell $1 quote currency unit. Number 5. Credit score. Building a track record of being a reliable borrower can improve your credit score, which in turn makes borrowing money less expensive and more accessible. If you borrow to buy stocks, then make sure you check your portfolio's net interest margin to see if borrowing money is making it more profitable. You build a track record of being a reliable borrower, which makes borrowing money less expensive and more accessible. By borrowing money to invest in real estate or businesses, or even just starting one, you have an opportunity to take advantage of high interest rates while earning returns that may exceed those offered by savings accounts. Keep in mind that as with any investments, borrowing money has risk. Make sure you understand how much debt will affect your financial goals before signing on the dotted line. As a business owner, you know there are lots of things that go into deciding whether to finance a new project. Market feasible studies, cash flow forecasts, and sales projections all play roles in whether a loan makes sense for you. But borrowing money isn't simply about generating profits. Getting financing also builds your credibility as someone who can be counted on. And history shows that's especially true when it comes to building personal wealth. Build a positive history if you're not sure where to start. Take some time to look at your credit report and make sure everything was accurate. It's all too easy to assume that money only comes from two sources: hard work and being born into it. If you don't fall into either of those camps, then you do have to work hard if you want to get ahead financially. However, there's actually another way to make money without working as hard, and that is called debt trading. If you find yourself in possession of some pretty valuable assets but little cash on hand, then debt trading may just be the financial solution you need. Anyway, that concludes today's video. Don't forget to subscribe and give us a thumbs up. And as always, please tell us what you think about this video in the comment section. We'd love to hear them. Thanks for watching, guys, and we'll see you at the next one.